Hi everyone. So today we'll be discussing chapter number 6, which is pertaining to completion and review. There are three essays which are there in this particular chapter. The essays are quite small. The concept is something that we have already done in accounts and we've been doing it since our, I don't know, 12th standard. And so it's also covered in your FR. So you know most of the basic concepts. The chapter is important because questions are asked, of course, from this particular chapter, but also because when you go to essay 700, questions are asked pertaining to 570 and 700 together. So it tests your knowledge both on 570 and 700. So from that perspective also it's a important chapter. Now let's start. So basically this particular chapter talks about three essays. One is your subsequent events, another is your going concern, and then the last one is your written representation. Now, what are subsequent events? Something that we have done in FR, that when you have your events which are occurring after the date of financial statements, or events occurring after your date of audit report, or events occurring after the date the financial statements have been issued. In accounts, we study as to how, from an accounting perspective, you will have to give the effect of these particular transactions. But here in auditing, we see that what is the impact on the auditor and the auditor's report when subsequent events are subsequent events occur. So before we start, just some clarity. Here your date of FS, what is your date of FS? The year end, correct, 31st March 2025. Now date of audit report will be sometime after your date of FS, say for example 1st June 2025, because this is the date when I'm issuing the audit report after performing my procedures. And then you have your date of FS issued. Sometimes the date for audit report and FS issued is the same, but for simplicity purpose, not always. Okay, sometimes like smaller companies will have it on the same day, but for most of the companies it is afterwards. So say for example it is 20th June 2025. So for simplicity we'll assume that these are all three different dates. Now what are subsequent events? One possibility is that events which are occurring after the date of financial statements but before the date of audit report. So before the auditor has issued the audit report, he comes to know about certain events which have occurred, but these events have occurred after the date of financial statements. So what does the auditor have to do and how he will record it in his audit report is what we study. So this is situation 1. Second situation is that he may have issued the audit report already, but the financial statements are not yet issued. So the subsequent events are occurring after the date of audit report but before the date the financial statements are issued. And third situation is that the audit report has been issued, financial statements have been issued, and then there is a subsequent event. So in all the three scenarios, how will you, as an auditor, what are the actions that you will take and how will this reflect in your audit report is something that you will get knowledge about in this particular essay. Okay, so read it once. Essay 560 deals with the auditor's responsibility relating to subsequent events in an audit of financial statements. The objective of the auditor in this regard are to obtain sufficient appropriate audit evidence about whether such events are appropriately adjusted or disclosed in the financial statement. So whether these events are adjusted or not adjusted in the financial statements is the objective of this particular essay, correct? Now in some further in some facts have come to his knowledge after the date of audit report to respond to those facts such that they had been known to him as on the date of report. So what action would an auditor take had these facts come to his knowledge before the audit report was issued, is what we will understand here. Responsibility relating to subsequent events, events occurring between the date of financial statement and date of audit reports, and facts that become known to auditor after the date of audit report. So after the date of audit report, we have two situations, correct? What is the objective of the auditor? Obtain sufficient appropriate audit evidence about events occurring after the date of financial statement and between the date of financial statements and the date of audit report that require adjustment or disclosure in the financial statements are appropriately reflected. So my responsibility is that these are properly reflected in the financial statements in the audit report. Respond appropriately to facts that become known after the date of audit report, and that had they been known to the auditor as on that date may have caused the auditor to amend the auditor's report. So we will look at both the situations. Now coming to events occurring between the date of FS and the date of audit report. So in our example, this we are looking at situation number 1. Okay, now in situation 1, if it comes to his knowledge, what are the actions that he is supposed to take? Auditor shall perform audit procedures to ensure all such events have been identified. So first he will identify that which are the events which have come to his knowledge and which were not there as on 31st March 2025. Then consider the auditor's risk assessment in determining the nature and extent of such procedures. So he will assess the risk by performing audit procedures. If such event is identified, determine whether such event is appropriately reflected in the financial statement. Is it properly reflected in the financial statement or not is my responsibility. Obtain written representations that such events have been adjusted or disclosed. So whether I am adjusting these events or not, whether I am disclosing these events or not, is something that I will take into consideration. So what are the things I have to do as an auditor when it comes to my knowledge and not yet issued my audit report? So first is, once the financial year has ended, when I'm giving a reasonable assurance in my audit report, first thing I will do is I will identify. There is a high possibility that subsequent events are there. So I will identify that, okay, these are the subsequent events that have occurred after the date of financial statements. Now, say for example, like a pending litigation, correct? So pending litigation, I had some pending litigation. I assumed my claim would be say 1 CR. After the date of financial statements in the month of April, the litigation was resolved and I actually got 45 lakhs. Okay, so here there is a difference between my assumption, my provision, what was there, and what has actually come here. So here there's a difference. So that gap is something that I will first have to identify that, okay, this was the case and the issue has been resolved before I give the audit report. Once I've identified, I will see what procedures I need to perform, risk assessment procedures, in order to ensure that my financial statements are correctly reflected, that the audit report is correctly reflected. Third, I have to reflect the proper, what do you call? I have to give a proper effect in my financial statements. So now my financial statements will change because I have to give effect to that 45 lakhs received as compared to 1 CR which I was expecting to receive, correct? And last is written representation that it has been adjusted or disclosed. So whether this amount has been adjusted or not, because who is preparing financial statements? The management. I will review the financial statements, I will provide reasonable assurance, I will conduct audit procedures in order to find out that everything that's given in the financial statement is truly and correctly reflected. So for the events which have occurred between the date of FS and the date of your audit report, I will obtain written representation. This is situation number 1. Now coming to situation number 2, which becomes known to the auditor after the date of audit report but before the financial statements are issued. Correct? So here we are talking about situation 2. I have issued the audit report but the financial statements are not yet issued, and now I come to know that there is a subsequent event. This and this is quite similar because everything is happening after the date of audit report, but there is a minor difference. We'll see what. Okay, so here he's saying discuss the matter with management or TCWG. So first I will discuss. I have issued the audit report. This has come. So what is the implication? Determine whether FS needs amendment. Then I will see that whether my financial statements need amendment or they don't need amendment. Inquire how management intends to address the matter. So first the financial statements has to be prepared by the management only. So I'll check with management that what exactly are you planning to do with the subsequent event that has come to your knowledge. Now there are two possibilities. One is the management will amend the FS, another is they will not amend the FS. Correct? If they are amending the FS, then auditor should extend the audit procedures, either amend the audit report to include an additional date restricted to the amendment or provide a new amended report including a statement in EOM or OM para. So if I know that they have they are planning to change the financial statements, if they are changing the financial statements, I will have to review the financial statements, change financial statements. To review the change financial statements, I will have to conduct my audit procedures. If I am conducting audit procedures and I am changing and I am giving new financial statements, my auditor's report will also change. So either I will give an amendment saying that this is the amendment to the extent of the new events that has come to our knowledge, or I will issue a new report. And in the new report, I will put it in the emphasis of matter or OM para, the other matter paragraphs, depending on what kind of matter is there, key audit matter. And then basically I will highlight it. Now, if the management does not amend, then if the audit report not yet provided to the management, modify the opinion. I have issued, but I am not provided. So I will modify my opinion. If the audit report has already been provided to the management, notify TCWG not to issue it to third parties. If still issued, then take appropriate action to prevent reliance. So what has happened here is that one situation is I amend, one is I don't amend. Okay. Now when I'm amending, before not amending, my responsibility is to check that whether the subsequent event has an impact on the FS. If there is an impact, whether the management decides to amend or not amend, I will have to give reasonable assurance considering this. Correct? So I have to take into consideration. Management wants to take into consideration or don't want to take it into consideration is their call. My call is to decide whether audit report should take into consideration or not. If it is having an impact on the financial statement, then in that case I know that I will need amendment. So what I will do is that I will go and I will discuss with the management that this is something substantial. In my view, FS needs to be amended. What are you planning to do? So I will tell him, identify, communicate with him, identify. Okay, so I know impact is there, so I will go communicate plus discuss the way forward. Correct? Now management said that no, we agree that this is a major thing and this has an impact on the FS and we need to amend the FS. Very good. So he is amending. If he is amending, my responsibility is to check what he has amended. So I will have to do audit procedures to check and I will have to change my audit report. Logical? He is saying I am not amending, but I know in my view it has to be amended. Yes or no? So now when I know that even though he is not amending, I need to amend it. So in my modify opinion, okay, so here I will modify my opinion and I will say that this is something that should be done. But before I modify opinion, I will see whether I have given the audit report to management or not. If I have not given the audit report, sorry, if I have not given the audit report to them already, I've issued the audit report, but I've not provided it to the management, then in that case, I will have to go and modify the opinion because the audit report is still with me. Management has not yet done anything about it because the management has not received the audit report. Okay. Now, so when will that happen? Say for example, here 1st June is my date of audit report. Okay, and 2nd June I come to know about this. So 1st June in the night at 8 o'clock I signed, I printed audit report, everything is ready. Now on 2nd June 2025 I come to know that this is the case. I have not yet handed over the audit report to them, so it's not gone out to third parties also because audit report is with me only. I've just signed and kept it in my drawer. Correct? So here I can modify the opinion. But if it comes to my knowledge, on 10 June 2025, by the time my office boy is gone, he's delivered the audit report, everything has happened. So here I will go and tell TCWG that I've given you the audit report. This needs amendment because it has an impact on FS. You are not amending, fine, but I will have to change my audit report. So this audit report should not go to third party. Okay, but TCWG says sorry, we have already given it to third parties and now we can't do anything about it. Then in that case he's saying that you will have to take appropriate action to prevent reliance on the audit report. So I can issue a notice, I can issue an ad saying that this audit report, or I can send out a letter to the third party saying that this audit report which is there is something which cannot be relied on because there is an event which has occurred after the date of audit report and which has an impact on FS. So the financial statements need to be amended and the audit report issued on 1st June does not hold true. Understood? So that is what I will do. So this is situation number 2 where financial statements not issued, date of audit report, audit report issued. Third situation is facts that become known to the auditor after the financial statements have been issued. So now the management also has changed the financial statements, issued the financial statements and audit report to already chala gaya hai. So here this option gaya na, amend, not this option, here amends the financial statement because they have already issued it. Correct? Here they could do that because they have not yet issued it in the second situation. In the third situation, they have already issued financial statements. I have also issued audit report. Now, what will I do? Discuss matter with management TCWG. So if you see, it is the same. Correct? Determine whether financial statement needs amendment. Same. Inquire how management intends to address. Again the same. Everything is the same. What is changing now here? The fourth point, amend, don't amend. Here I will say review. If management has taken steps to inform about the situation to everyone in receipt of the previously issued financial statements, if steps taken, steps not taken. Now management has issued, I have also issued. So I will ask management that are you planning to inform third parties that the financial statements were issued like this with this particular event considered as being receiving rupees 1 crore, but actually we have received 45 lakhs. So what are you planning to do? If they take steps, issue new amended report with EOM or OM para. If steps have not been taken, take appropriate steps to prevent reliance on the audit reports. So again same situation what we did here. If steps have not been taken, I'll do that. If not, then I will amend. This is also the same. But here, management will not amend. They will have to take steps in order to inform that this is happening. Are we understanding? So, this is your 560. Very, very simple. Concept we know, only the action points is something that we need to remember. Uh, Before we go to 570, so this is all about your 560. Before we go to 570, let's just quickly go through the questions which have been asked for SA 560. This includes your module questions. Move Fast Limited is engaged in the manufacturing of shoes and slippers located in Bahadurgarh in Haryana. Due to unprecedented rains in the area in the month of September 2023, many areas of the town got inundated due to the choking of sewer systems. As a result of the above, the company premises located in town were also affected, resulting in damage of stocks. The company has lodged a claim with insurance company for 1 CR, and the same is shown as claim receivable as on 31st March 2024. So this is my date of FS as the claim was settled at the year end. Okay. The insurance surveyor appointed in the case submitted a report to the insurance company recommending a claim of 45 lakhs in the month of April 2024. So here I know that this is a subsequent event because it has occurred after the date of balance sheet. The company has also given its consent for the same and settled. The amount of 45 lakhs was transferred to the bank account on 15th of May 2024. So on 15th of May, the amount has been received by the company. You have just finished performing substantive procedures by end of May. Is there any responsibility cast upon you as auditor for the above situation? So I have prepared audit report? No. I have finished my audit procedures. So this is scenario 1, correct, where it is after date of FS but before the date of audit report. So what do I have to do? Here again you write down the facts. Therefore, financial statements should be adjusted to reflect fresh information emanating from described event. Should be asked to take appropriate action. Management should be asked to take appropriate action so that the adjustment pertaining to above is properly reflected in financial statements in accordance with the applicable financial reporting framework. CA Anuj is the auditor of a listed company. He is in the midst of conducting audit of the said company for the year ending 31st March 2024. At a meeting of the board of directors held on 17th April, a dividend of 1 CR is proposed to equity shareholders at rupees 10 per share. And such a proposal has a good chance of being approved in the AGM to be held after few months. His audit procedures are near completion. He is contemplating finalizing the audit report by 31st of July. Is there any responsibility thrust upon him as auditor of the company? So here, after the date of financial statements, before the date of audit report, they are contemplating, they are proposing to give a dividend. Is dividend yet given? No. They have just decided that they may issue dividend. Now, we have studied last year in law that dividend, when will it be issued? Once the board of directors has given a proposal, the shareholders have to approve it at the AGM. If shareholders don't approve, then dividend doesn't go out. But as on date, nothing has been approved. Only board of director has proposed. So there is no responsibility. See, read. Only basically disclosure will be there, but otherwise no change in FS. In the given situation, dividend has been proposed on 17th. It is an example of condition that arose after the reporting period. No liability exists for the company because there is no obligation to pay. Therefore, the above situation does not require recognition of above proposed dividend in FS. So, my FS is not changing in any way because it is not approved. Tomorrow, if it doesn't get approved at the AGM, then in that case, board of directors proposing is irrelevant for me. Correct? It is an example of events which do not require adjustment. However, it should be disclosed in FS in notes to accounts. It should be ensured it is disclosed in notes to accounts in FS. He should verify it in accordance that it is disclosed. So his responsibility is only to ensure that the management discloses the same in the notes to accounts. Ramadhan and Company are the auditors of XYZ Company Limited for the year ended 31st March 2024. The audit report for that year was signed by Ramadhan and Company on 4th May. Okay. Annual general meeting was held during the month of August. On 6th May, the company has received a communication from the central government that an amount of 5,800 crores kept pending on account of incentives pertaining to financial year 23-24 had been approved, and the amount would be paid to the company before the end of May 2024. So here I have this as my date of audit report. Financial statements is fine. This is the subsequent event. Correct? So subsequent event is after the date of audit report? Yes. What is the subsequent event? That by May you will get 5,800 crores. Okay. To a query to a CFO of the company by the board, it was informed that this amount has not been recognized in the audited financial statements in view of the same not being released before the close of the financial year. So there is no effect given to this in the financial statements, and due to uncertainty of receipt. Now, having received the amount, board of directors wished to include this amount in the financial statements of the company for the financial year. So management wants to amend their FS, correct? On 8th May, the board amended the accounts. Okay, so here we are falling in this scenario. Which scenario? Here. They are amending the accounts. Yes? Now, and requested the auditor to consider this event and issue a fresh audit report for the year ended 31st March 2024. Analyze the issues involved and give your views whether or not auditor could accede to the request of the board of directors. So this is events which are after the date of audit report but before FS has been issued. Your scenario number 2. Isme we know what we have to do. Discuss with management. Discuss whether discuss with management, determine whether there is a need to change, and inquire with management to how they wish to address the issue. So that we will write down. If management amends, so again coming here, management amends, you will carry further audit procedures and audit report to include additional date or provide it in a new report in EOM OM para. So same thing you will write down here. See, if the management amends the FS, the auditor shall carry out the audit procedures necessary in the circumstances. Further, the auditor shall extend audit procedures, provide new report on the amended financial statements. However, audit report shall not be dated earlier than the date of approval of the amended FS. So, if the board has approved the FS on which date? Amended on 8th of May. So, my audit report will be after 8th of May. Correct, because once they have changed only then I can review, then I can give my report. Correct. So logically it will be after 8th of May. In the instant case, 5,800 crores received in month of May after finalization and signing of audit report. Board of directors have amended it. So auditor should consider this event, issue a fresh report for the year ended 31st March 2026. After applying conditions, Ramadhan and Company can issue new audit report subject to date of audit report should not be earlier than the date of the amended financial statements. Correct. Next. CA Shobit is conducting an audit of XYZ for 23-24. The company is engaged in export of handicraft items in Europe. The audit is nearing completion in the month of July 2024. However, it becomes known to CA Shobit that one of the overseas buyer has made a legal claim against the company on 1st June 2024. So here I have still not given my audit report, correct? For injury caused to customer of one European buyer due to substandard dyes used in rug of one lot of orders shipped in August 2023. The management of the company has decided to agree to an out-of-court settlement of 4 CR to protect its reputation. The financial statements are silent on the issue because this event has occurred after the date of financial statements, but I as an auditor have come to know about it before I have issued my audit report. So scenario 1 that we have written down, correct? Discuss how CA Shobit should deal with the above issue. So here again write the facts. This is an event between date of FS and date of audit report. It provides evidence of conditions that existed as on the date of financial statements and requires adjustment in the financial statement. Now here this is event 1, correct? So you will do what? You will identify, perform any additional procedures, risk assessment procedures. You will make a proper disclosure and obtain a written representation. So the auditor shall request management and TCWG to provide a written representation 580, which we will study today, that all the events occurring subsequent to date of FS and for which applicable financial reporting framework requires adjustment or disclosure have been adjusted or disclosed. CA Shobit should ensure that appropriate adjustments and disclosures are made. So we have already written down here that we need to make disclosures and obtain a written representation, correct? So we'll have to do that. In absence of the same, he should consider the impact of the said event and report accordingly. So basically those 3 charts which we have written, if you remember that, then when you're writing it down, you can write it down in your own words to mention this. Now when you're writing written representation, once you've studied 580, you know that written representation comes from 580, then you can just mention SA 580 so that it further improves the quality of your answer. Next, the audit report of Rare Private Limited for financial year 23-24 was issued by SRM and Company on 23rd July. However, a case was filed against Rare Private Limited on 9th of August. So this is my date of audit report, and subsequent event has occurred after the date of audit report with the civil court with respect to an incident caused in its factory on 24th Jan 2024. The future outcome of which may result into paying heavy penalty, which was informed to Mr. Rishabh Pandey, the partner of SRM and Company. Mr. Rishabh discussed the said matter with the management and it was determined to amend the financial statement. So scenario 2 and amend financial statement, we know that. Further, Mr. Rishabh inquired how the management intends to address the said matter, to which he was told said matter was going to be disclosed as contingent liability for a court case to the footnote in the balance sheet with no additional disclosure. So he said that okay, amendment hoega, but on further discussion, how will the amendment happen? So here, kidhar gaya? Here, amendment happens. And I have inquired also with the management. So I asked him how. See, when you're making an amendment, the amendment also has to be correct, no? Only because you're amending, तो मैं सब procedure कर देगा ऐसा नहीं है. That amendment also has to be a correct change. He's saying I will only put a contingent liability. I will not put any additional disclosure. The management told Rishabh that such disclosure as was enough, as he would be further going to provide description of the said court case and its outcome in the emphasis of matter para in his amended audit report. So they are saying that you will put a EOM para in the audit report, which we will study in the 700 series, correct? So in this context, please answer. So this question should also be read again once your 700 series is done. Whether Mr. Rishabh on behalf of SRM and Company has properly adhered to his responsibilities under 560 on becoming aware of the court case, whether the contention of management is valid with respect to disclosure of court case in the financial statement. Okay, so here what is happening is that I have come to know about an event after the date of audit report, before FS has been issued, it is important that this be recognized in the financial statement, and the management has to amend the financial statement, which they have agreed to amend. So here my 3 points pertaining to this: inquire with management, determine to need FS, and how they are going to reflect is what I will write down. If they are amending, I give a new audit report and I also include it in my EOM OM para. So this is what answer I will write. The only issue with this answer is that they are reporting it as a contingent liability. Now when we study EOM, you will realize that EOM can not replace the disclosure that the management has to make. Management and auditor, they are two independent parties. So what management is doing, they have to do independent of whether I show in EOM or I don't show in EOM. But only because I am showing in EOM, the management says I will not show in my notes to accounts, that kind of disclosure is incorrect. So the management has to make a proper disclosure. Auditor will amend, show in EOM, all of that is fine. Read this, but also read this question, write it down, reread after your essay 700. Okay, sorry, where is it gone? Revisit after essay 700. Okay, 700 series, not 700, 720. See, 720, no, sorry, 706, my bad. Write down, no, sorry, read. As per essay 560, subsequent events, the auditor. So here basically this question is checking your knowledge about two things. Even in going concern, you will see that there are certain questions where going concern and 700 series are together. So it tests your knowledge on both the essays together. As per 560, subsequent events, auditor has no obligation to perform any audit procedures, correct? Because audit report has been issued, we know that. However, when after the date of audit report but before the date of financial statements are issued, a fact becomes known to the auditor that had it been known to the auditor at the date of audit report, may have caused the auditor to amend the auditor's report. The auditor shall discuss the matter with management, determine FS needs amendment, inquire how management intends to address the matter. In the given case, on becoming aware of the court case filed against Rare Private Limited, Mr. Rishabh discussed the said matter with the management and was determined to amend the FS. So Mr. Rishabh is doing his part. Also inquired how management intends to address the matter. So all three things he has done. Thus it can be said Mr. Rishabh has properly adhered to his responsibilities. He has done what is required to be done by the SA on becoming aware of a case filed. As per 706, emphasis of matter and OM para, independent auditor's report on emphasis of matter is not a substitute for a modified opinion in accordance with SA 705 and required circumstances of specific audit assignment. Disclosure in financial statement that the applicable FR framework requires management to make otherwise necessary otherwise necessary to achieve a fair presentation. Reporting in accordance with SA 570 where a material uncertainty exists, casting a doubt on ability to continue as a going concern. In the given case, this you will be able to understand better once you read your 705, 706. Auditor was going to provide a description in its outcome in EOM para. So this auditor was supposed to do in any case. There was no further need for it to provide additional disclosure about the court case in FS. The said contention of management is not valid as EOM cannot be used as a substitute for disclosure required to be made in the FS as per the applicable financial reporting framework, or that is otherwise necessary to achieve fair presentation, which is the responsibility of the management. So this last part you will be, the first part you know 560, last part you will be able to understand better once you have done your 700 series. Now coming to the next part, which is going concern, again very important. Now, SA 570 is talking about going concern. What is going concern? Going concern is basically nothing but that whether my entity will be able to continue in the foreseeable future. Foreseeable future is maybe a year, 2 years down the line. Can I see that this company will continue its operations in the foreseeable future? Then I will say that okay, this can be a going concern. If I feel that the entity is in a situation, in a financial situation where it will not be able to continue its operations in the foreseeable future, then I will say that going concern is an issue. We have studied all around in accounts that going concern is a very, very important thing for the company, and that every time the auditor, when he is giving the audit report, he has to, or the management giving the notes to accounts, they have to answer whether the company will be able to continue as a going concern or they will not be able to continue as a going concern. And it is a very, very important disclosure by the company that is required to be made. So this essay also talks about going concern, what a going concern is, and what is my roles and responsibility as an auditor as per this essay to make disclosure in my audit report pertaining to going concern. And what should I do if I feel that the company will not be able to continue as a going concern? Then what are the steps which I need to take as an auditor in order to ensure my compliance with this particular essay? Okay, so what is it saying? See, SA 570 going concern deals with auditor's responsibility in audit of FS relating to going concern and implications for the auditor's report. The auditor's responsibility are to obtain sufficient appropriate audit evidence regarding use of going concern basis of accounting in preparation of FS by management. On the basis of evidence obtained, it is concluded whether a material uncertainty exists relating to events or condition that may cast a significant doubt on entity's ability to continue as a going concern. So I have to be vigilant, and I have to see whether anything which will create a doubt on its ability to continue as a going concern. This essay deals with auditor's responsibility in audit of financial statements related to going concern, implication on the audit report. Responsibility of management to make specific assessment. This is on the management, okay, mind you, this is management, this is auditor, दोनों का responsibility. Where will manager report, management report notes to accounts. Where will auditor report? Audit report. So here management will make a specific assessment, make appropriate disclosures in connection with going concern. So here when going concern hai, there is no issue, there is no problem at all. You will just say it will continue as a going concern. When there is a doubt on the going concern, at that point of time, you have to change your disclosures. What is the responsibility of auditor? Obtain sufficient audit evidence, conclude appropriateness of management's use of going concern, check whether management's assessment is correct or not, assess whether material uncertainty exists. As per me, does any material uncertainty exist which can impact going concern? Auditor cannot be expected to guarantee entity's ability. We don't have to guarantee, we just have to provide reasonable assurance. Correct? Now, when conditions or events are identified, request. So now I feel that there are certain conditions and events which may cast a significant doubt on the entity's ability to continue as a going concern. What will I do? Request management to make assessment. I will first go and tell management, hello, I feel that going concern will be impacted. So you make your assessment. Evaluates management plan for future action, analyzing the cash flow forecast of the entity, considering additional facts or information available, and requesting written representation regarding plans for future action and feasibility of these plans. So I will go and tell the management that this is the issue, what are the actions you are planning to take, what is the additional information that is available with me. I will check the cash flow and see whether actually there is a problem with the going concern or no. and then end of them I will tell them, you please give me a written representation. So everywhere I will, written representation is a common thing that you do from management, correct, when there's a problem situation which you feel will arise. Now, implications on the audit report. Use going concern is appropriate, then the auditor shall express adverse opinion. Sorry, this is not appropriate. This is, write down, add the words inappropriate. If it is inappropriate, then I will give a adverse opinion saying that it is not something which will continue as a going concern, so I will give a adverse opinion. Use of going concern is appropriate, but a material uncertainty exists. Management has said that going concern is something which is in danger. There is a doubt and there is a material uncertainty. Adequate disclosure is made in FS, unmodified opinion given, and a separate section, material uncertainty relating to going concern, you will have to write down. So I will give an unmodified opinion because management has already disclosed. So in my opinion, whatever he has disclosed is not a problem at all. This you'll also, I'll just add a few points here in the notes. Other important points: auditor shall communicate with TCWG events or conditions I identify that may cause a significant doubt. If there is a delay in approval of FS and the auditor believes such delay can be related to events or conditions relating to going concern, auditor shall perform or additional procedures as well to consider the effect on auditor's conclusion. Okay. Here I have added a few more points which I thought would be relevant. Yes. Here what I am saying is that yes, implications for audit report. I am just saying that use of going concern is inappropriate. Then express an adverse opinion. We know that. Now, going concern appropriate, but material uncertainty is existing. Yes, material uncertainty is there. If additional disclosure has been made in the FS, not made in the FS. If management has said that okay, we also believe that additional going concern, material uncertainty exists, then draw attention to the note in FS and state events that cast a doubt. And here, if it is not made, so here I will give an unmodified opinion. Correct? But if management has not disclosed, then I will have to give a qualified or a adverse opinion. And last is management unwilling to make or extend assessment, consider implications on audit report. Correct? So if the management has not made any changes and they are saying that no, there is no problem, then in that case I will have to see implications on audit report. Accordingly I will give my audit report. If they agree that uncertainty is there and they say we will disclose it in the audit in the notes to accounts, then I will say very good, I will give an unmodified opinion and I will just give a reference in my audit report saying refer to notes to accounts of the management. If management agrees, yes, there is a problem, but management is not making a disclosure in the FS, then I will have to give a adverse or a qualified opinion. So I will change my opinion and I will say that there is a significant doubt to continue due to material uncertainty existing and there is a doubt on the ability to continue as a going concern. So that is something that I will mention in my audit report. Okay, so now coming to the last part of this particular chapter, which is your essay 580, written representation. It's a very small essay and we have been using this written representation everywhere since the time we have started. We have been using it. So what is it talking about is wherever there is some issue, going concern issue or anything which the auditor feels that there is a problem area here or something that the management I want to take a written I want to take it in writing from management or TCWG that this is something which you give it to me in writing, so I have it as a part of my audit evidence. At that point of time he will take a written representation. What is the essay talking about? Same thing. Deals with auditor's responsibility to obtain written representations from management and, where appropriate, those charged with governance. Although written representation provides necessary audit evidence, they do not provide sufficient appropriate audit evidence. It's a audit evidence, but not necessarily sufficient appropriate audit evidence, because again that depends on the risk taking capability of the management. No, you tell me to give something in writing. If I am risk averse, I will say okay, take it in writing, how does it matter, right? Okay, so he'll write and give it to you, but some may not write and give it to you. So he's saying that it is a audit evidence, but not sufficient appropriate audit evidence. That you still have to do. Only by taking that representation does not relieve you of your responsibility. Furthermore, the fact that management has provided reliable written representation does not affect the nature or extent of other audit evidence that the auditor obtains about the fulfillment of management responsibility of specific assertions. Essay scope is the same. Objective is obtain written representation from management or TCWG that they fulfilled their responsibility for preparation of FS and completeness of information provided. Support other audit evidence relating to FS by means of written representation. Respond appropriately to written representation by management. Written representation as audit evidence. Although written representation provide necessary audit evidence, it is not sufficient appropriate. Date and period covered. The date of written representation shall be as near as practicable to, but not after the date of auditor's report. You can't take written audit evidence after issuing audit report. Logical or not? Of course not. You can only take written audit evidence before the audit report has been issued. Written representation shall be for all FS and periods referred to in the auditor's report. What are the other important points? Doubts as to reliability. If written representation is inconsistent with other audit evidence, then auditor will perform audit procedures. Why? Because this is not sufficient appropriate audit evidence. So I as such have to perform my additional procedures. If auditor concludes that they are not reliable, then the auditor shall take appropriate action in 705. So which is, he will modify the opinion. Now, if written representation not provided, one is that provided not reliable, second is you don't provide only, then reevaluate the integrity of management, take appropriate action and impact on audit report in SA 705. Okay, so this is all about your audit evidence. It's sorry, not audit evidence, written representation. So written representation you have to take from management TCWG. This written representation can be used as audit evidence, but it is not sufficient appropriate audit evidence. This evidence which I get, I have to check the reliability of the information that is being given to me. Now, because it is not sufficient appropriate audit evidence, if I feel it's not reliable, then I will have to still perform further audit evidence. Even if I feel it's reliable, I still have to perform the audit evidence. I take it before the date of audit report, not after. And yeah, I think that is it. I have to respond appropriately to the opinion, and if I ask for opinion they do not give, or I feel that it is not reliable, then in that case I can issue a modified opinion. Simple. Yes. Now coming to the questions for SA 570 and 580. Joy Limited is an entertainment company which runs a circus and travels around the country to entertain the masses. The circus began its popularity over the past few years, and attendance has reportedly dropped by as much as 75% in the current financial year. Animal rights activists continuously targeted the circus for its use of animal creatures like elephant in the show. The CEO noted that the audience seemed to be abandoning the circus due to the expanding entertainment options. The high cost of moving the show from city to city eventually made the business model untenable. As a result, many key managerial personnel left the company. There were delays in the payment of wages and salaries. and the bank from whom the company had taken funds also decided not to extend further finance or to fund further working capital requirements of the company. When discussed with the management, just a second, please. The statutory auditor understood that the company had no action plan to mitigate such circumstances. Further, all such circumstances were not reflected in the financial statements. What course of action should the statutory auditor of the company take in the company in such a situation? Here, going concern is an issue because the company is not doing well, and because the company is not doing well, the going concern, the probability of it carrying on business for the foreseeable future seems to be difficult. So here first, management has realized that there's a problem, so going concern is an issue, and they've not mentioned anything about how the management has reported it in their notes to accounts. So statutory auditor will have to report this, discuss with management and report. The management will also have to reflect it in their notes to accounts, and if there are any audit procedures, so first the audit procedures will have to be done, then the management will refer in notes to accounts, and statutory auditor will also express an opinion. See how it's written here. SA 570 going concern deals with auditor's responsibility in the audit of the financial statements relating to going concern. Auditor's responsibility obtain sufficient appropriate audit evidence and conclude on the appropriateness of management's use of the going concern basis in the preparation of the financial statements, and to conclude based on audit evidence obtained whether a material uncertainty exists about the entity's ability to continue as a going concern. When the use of going concern is inappropriate, financial statements have been prepared using going concern, but in the auditor's judgment, management's use of going concern in the preparation is inappropriate. Auditor shall express an adverse opinion. So they have just mentioned that what will be the treatment by management and how the auditor will reflect. When adequate disclosure of material uncertainty is not made in the FS, the auditor shall express a qualified or adverse opinion in accordance with SA 705, and basis for qualified opinion for the auditor's report state that a material uncertainty exists that may cast a significant doubt on the entity's ability to continue as a going concern, and the financial statements do not adequately disclose this matter. In the present case, they have given what are the issues, which are your facts of the case. Therefore, considering the above, going concern basis is inappropriate for the company. Such circumstances are not reflected in the financial statement. Joy should express an adverse opinion. In the basis of adverse opinion paragraph of auditor's report, the statutory auditor should state that the material uncertainty exists that may cast a significant doubt, and the financial statements do not disclose this matter. Action is also required as per Caro. Once we do Caro, you'll know that you'll have to write down Caro. That on the basis of the financial ratios and expected dates of realization of financial assets and payment of financial liabilities accompanying the FS, the auditor's knowledge of board of directors and management plans, whether the auditor is of the opinion that no material uncertainty exists as on the date of audit, that the company is capable of meeting its liabilities existing at the date and when they fall due. So this, when we do Caro, we'll again get back to going concern and Caro both. CA Soumya, as the auditor of the company, engaged in rearing of poultry, birds and containing eggs therefrom. The company has performed very well since its incorporation in 2013. Its sales has also grown, and the company has expanded in its market from the native northern state of promoters to far-flung areas in the eastern parts of the country. However, since the last 2 years, the company's fortunes has nosedived, first due to the effects of pandemic and then due to the current outbreaks of bird flu thrice in the span of 2 years. Company sales have dipped from 50 to 10 crores. The major part also wiped off and she's not optimistic about the going concern assumption followed by the management. Management now wants to start new batches of births. The earlier working capital facilities of the company granted by the bank have also been restructured to support the business. She was informed that the repayment of restructured working capital term loans are to begin from ensuing year. No fresh credit facilities have been granted by the bank. Company also plans longer credits from animal feed suppliers. The company plans to take additional measures to prevent safety of livestock, including aggressive vaccination, preventive health checkups, and more frequent visits of veterinary staff. The villagers in surrounding areas have accused the company of spreading air pollution. Management has prepared cash flow forecasts for her examination. Discuss the approach to be adopted by her in examining going concern assumption, keeping in view the specific reference to cash flow forecast. So here if you see cash flow forecast, if it is already prepared, then in that case you have to see how the cash flow forecast has been prepared and what is the reliability of the underlying data. So we have this chart prepared in the book. We can just, where is it? Yeah, here, sorry. So evaluate management's plan for future action, likelihood of situation improving if entity has prepared cash flow forecast, correct? This part. Then analysis of forecast, adequate support for assumptions underlying and reliability of such data. This is what you have to check as a auditor before you give your advice. And then if the management is reflected, then in that case you don't have to show it in the you can show it as an unmodified opinion, correct? See, in accordance with 570, if events or conditions have been identified that may cast a significant doubt to continue as a going concern, auditor shall obtain sufficient appropriate audit evidence to see if uncertainty exists and entity's ability to continue as a going concern by performing audit procedures. When entity has prepared cash flow forecast, analysis of forecast is a significant factor in considering the evaluation of management's plan. Evaluating reliability of underlying data, whether adequate support for assumptions underlying the forecast. In the above situation, cash flow forecast has been prepared, therefore she should evaluate the assumptions, because the question is only about how the cash flow forecast has to be taken into consideration, correct? So she should verify assumptions regarding fresh batch of livestock, needs to check loan sanction letter agreements. Company plans to avail longer credits from animal feed suppliers. Is the downturn situation of company, how suppliers extend longer credits. Whether company has accounted for increased expenditure on preventive health checkup, vaccination and more frequent visits. Since villagers have accused the company of spreading population, how does the company plan to deal with the same? So these are the considerations she will check with the management, because here we have said that management's plan for future action, correct? So that is to be taken into consideration, and the cash flow forecast, how that has to be checked. CA Suraj finds that key financial ratios of the company like current ratio, debt service coverage ratio, inventory turnover ratio and trade receivable turnover ratio are in red and have deteriorated considerably as compared to the last year. Company is also not able to pay its creditors on time. The company is requesting time and again to bankers to grant additional credit facilities, but bankers are not listening. There have been significant losses to the company due to lack of response of the company's product in the market. As a result, many products are sold at below cost price. There have been situations company is not able to pay the salaries of staff on time. All these negative findings have led him to conclude that the use of going concern is not appropriate. He brings this matter to the knowledge of CFO. What is the reporting duty cast upon him in such a scenario? CFO informs him that the management in turn is ready to include in the disclosure the inappropriateness. So management is ready to put it in the notes to accounts, correct? So this is given to us. Here while telling the management what are the things that he has to take into consideration, how should it impact the auditor's opinion in case management itself discloses inappropriateness. If management itself is disclosing, then you can give an unmodified opinion, then you don't have to give adverse or qualified correct for the use of going concern. So here if we see this, material uncertainty exists, yes, then additional disclosures made in FS draw attention, state the events, and you give the unmodified opinion, correct? If the financial statements have been prepared using the going concern basis, in the auditor's judgment, management's use of going concern is inappropriate, the auditor shall express adverse opinion if it is inappropriate and management is not showing. So first question, correct? Here. Now, requirement for an auditor to express applies regardless of whether or not financial statement include disclosure of inappropriateness of management's use of going concern. Therefore, even if management discloses, it would not have an impact and he would need an adverse opinion. While the answer is given as this in the module itself, I would say that if the management, see, if you see the textbook and the law, not the law, but the pronouncement that is given to us, it says that if adequate disclosure is made in the FS regarding material uncertainty and inappropriateness, then in that case a disclosure has to be made and an unmodified opinion can be given. Okay, if the management is not willing to act, or if they are not ready to make a disclosure, then in that case you will have to give a adverse opinion. Messrs Airlift, carrying on business of passenger transportation by air, is running into continuous financial losses as well as reduction in sale due to stiff competition and frequent breakdowns. Financial statement for the year ended are now to be finalized. Management is quite uncertain as to its ability to continue in the near future and has informed the auditors that, having seized the matter, it has constituted a committee to study this aspect and to give suggestions for recovery. Till the study is completed, according to management, issue involves uncertainty as to its ability to continue its business as going concern. Sorry. And it informs the auditor that the fact of uncertainty clamping on the going concern would suitably be disclosed in the notes to accounts. State the reporting requirement in respect of this matter. So here uncertainty is existing. And here, because of the uncertainty, I have one thing to tell you about the last question, just one second. So uncertainty is existing because of so and so reason. Uncertainty, they are ready to disclose as going concern in the notes to account. State the reporting requirements of the independent auditor. So here the auditor is aware that the uncertainty is there, management is ready to disclose, so it will have to draw an attention. I will show you the notes, from there only we can see. Before we go there, just there's one mistake at my end. Here in the previous question, if you see, it's my bad, the answer is correctly given. Okay, it's not wrong, because here it is talking about inappropriateness of use as going concern. Sorry, I was under the assumption it is talking about material uncertainty. It is written as inappropriateness in the use of going concern. So here if you see, inappropriateness hoga to express an adverse opinion. So the answer here is correct, it is not wrong. Okay, so if you have written something saying it's a wrong answer, it's not a wrong answer, because inappropriateness likha hai. When I read here material uncertainty, mere ko batti jala. ठीक है. Now coming to this question where it is talking about material uncertainty existing, going concern is an issue, and management is ready to disclose in the financial statements. So here you will have to give unmodified opinion as an auditor, because it is asking about independent auditor's report opinion. So I'll give an unmodified opinion. While giving unmodified opinion, I will draw reference to notes in FS and state the event that cast a doubt. As per 570 going concern, if auditor concludes that management's use of going concern is appropriate in the circumstances but a material uncertainty exists, auditor shall determine whether FS adequately disclose the principal events or conditions, disclose clearly that there is material uncertainty related to events. If adequate disclosure about material uncertainty is made, auditor shall express an unmodified opinion and the auditor's report shall include a separate section under the heading Material Uncertainty relating to going concern. Draw attention to note in FS. State that events or conditions indicate material uncertainty that may cast a significant doubt. In the instant case, give the facts of the case. Therefore, auditor should disclose material uncertainty, express unmodified opinion in his audit report, shall include a separate section under the head Material Uncertainty related to going concern. Draw attention to notes and state the events or conditions that indicate material uncertainty. Mudit and Associates is appointed as statutory auditor of GRF Private Limited for the financial year 23-24. The company is into the business of health club, fitness center and gym costumes. CAM is the engagement partner for the audit assignment. CAM observed the following points while auditing. Customer base is reducing continuously due to tough competition. Payment of creditors are delayed and made with overdue interest. Company has not been able to pay salaries of staff. Key financial ratios are in red and have deteriorated considerably. Company has requested its bankers to provide additional working capital credit facilities of 1.5 crores, but bankers are not considering the company's proposal favorably. What audit procedure should be followed by CAM considering the above situation? How, sorry, not CAM, we have to highlight audit procedures. How auditor should deal if use of going concern is appropriate but material uncertainty exists and adequate disclosure is made in the financial statement. So second question, first is what is the audit procedure, which is here, your risk assessment procedure, what we have to do. Second question, they have clearly told you that material uncertainty is existing, so this particular part, and here disclosure is made in FS. So here in this part, this particular part is what they are asking about. So this we already know, we have done this in multiple questions, that you have to give unmodified opinion and state, draw attention to notes to accounts and state the indicators, correct? Now what about the risk assessment procedures? So here this particular discuss events with management, how management plans to address, evaluate management's assessment for the period which is covered, inquire, and to go beyond the period if it casts doubt. Additional procedures also can be done. So see here 570 going concern, identify events that cast a doubt, obtain significant appropriate audit evidence. Now what are the procedures? Management has not yet performed an assessment of entity's ability to continue, request management to make assessment, management's plan for future action to continue as going concern. Then your additional procedures here, likelihood of situation improving, entity has prepared cash flow. So you come here, if entity has prepared a cash flow forecast, analysis of the forecast is a significant factor in considering future outcome, reliability of underlying data, whether there is adequate support, consider additional facts or information, requesting written representations. Now CAM has observed that there is inability to continue, so should follow same review of assessment, reasonableness of cash flow, whatever we have stated above, ये सब नीचे लिखना है. Further, adequate disclosure about material uncertainties made, auditors shall express unmodified opinion, draw attention and state the events, correct? So you will do your Risk assessment procedures, because management has performed preliminary assessment, we write that as an assumption, and then we write down about additional audit procedures. So these are the processes that the auditor will have to follow. Now apart from that, management, once management is showing it in the notes to accounts, what the audit report will stay is as per this particular chart. Okay. CAK is appointed as statutory auditor of Seek India Limited under the Companies Act. Company is preparing its accounts in keeping in view applicable requirements of Division 2 of Schedule 3. On scrutiny of financial statements of company put up for audit, it was noted notes to account show aging of trade payable as per amendment required of Schedule 3 of the Companies Act. The aging schedule forming part of note is as under: outstanding for the following periods from due date of payment: MSME nil, others 2 CR 1 to 2 years, 4 CR 2 to 3 years, 3 CR more than 3 years 1 CR, and total of 10 CR. Disputed dues MSME is nil and disputed dues others is nil. Besides above, current ratio, debt equity ratio, trade payable turnover ratio and net profit ratio have slipped drastically as compared to last year and from standard norms. Most of the key financial ratios are in red. There is no relevant information concerning above in notes to accounts. Further, on reviewing bank statement of cash credit, it was noticed there is no debit transaction in the month of March 2022. On inquiry, came to know that stock audit was conducted in the month of Jan, and the stock auditors have commented via their report dated 25th Feb that the company has negative drawing power due to high creditors. Accordingly, the bankers have refused further debits in the cash credit account from start of March 2022. There is no information in this respect in the financial statement and the notes to accounts. Discuss how case should deal with this particular thing. So here this has to be disclosed in your notes to accounts. If it is not disclosed and there is of course a material uncertainty, then you will have to modify your opinion as per SA 570. So here you give the facts and say that these indicate material uncertainty to continue as going concern. There is no express disclosure in this situation where material uncertainty exists, which has cast a significant doubt to continue as going concern. Keeping in view the above fact, adequate disclosure is not made. CAK shall give adverse or qualified opinion as per 705. So here we are talking about this particular scenario. Yes, adequate disclosures not made in the FS. Simple question. Then question 7. MZE Limited is engaged in the manufacturing and export of ready-made garments. Company has lost overseas buyer. Did we do this question? Similar? No. Okay. The company has lost overseas buyer to Asian competitors with lower raw material and labor cost. As a result, MSE has lost out significant chunk of export orders, and trends has become pronounced in the year 22-23. Further, US economic recession caused delays in company's overseas payment, leading to company unable to keep its loan repayment commitments with bankers. Further, the company has not been able to pay its creditors on time. Even statutory dues payable by the company are either not paid or paid after a gap of 5 to 6 months, leading to extra costs. Due to declining revenue, the company cannot cover its fixed cost and has begun laying off employees. Considering all these circumstances, CAP doubts the company's ability to continue as a going concern while conducting statutory audit. He is studying management's assessment of the company's ability to continue as a going concern by studying projected profitability statement for the next 2 years containing turnover, expenses and profit estimates. Comment on the above with specific reference to audit procedures being performed by CAP in context of the relevant standards of auditing. So again, the question is on the risk assessment procedures. Management is performing preliminary assessment, yes, and because it is performing preliminary assessment, This is what you will take into consideration and further additional audit procedures that you will perform. Here see cash flow forecast and all of this. So this is similar to the risk assessment and additional procedures which we have to do. Correct? So it's the same pointers. If you see, just write down the facts, mention about, discuss with management how the management plans to take future action, likelihood of situation improving, and if entity has cash flow forecast, then what are the things that they have to take into consideration. OM Limited is engaged in the business of manufacturing of spare parts. Shanti and Associates are statutory auditors. During the course of audit, Shanti noticed that the company has a major customer, namely Korean market from South Korea. Owing to outbreak of war and subsequent destruction leading to government ban on import and export in South Korea, the demand from Korean mart for the products has ended for an unforeseeable time period. When discussed with management, CA Shanti was told that the company is in the process of identifying new customers. CA Shanti understands that though the use of going concern is appropriate, a material uncertainty exists with respect to identification of new customers. So here we are here, correct, in this situation. Now आगे क्या बोलता है? See, the fact is duly reflected in the financial statement. How should Shanti deal with the matter in accordance with relevant standard? So has it been disclosed in FS? Yes. So now how do I deal with it? Then I will have to give unmodified opinion, make reference to notes to accounts, and state the indicators. Your indicators are given to you. So those indicators you will have to write the facts of the case. Correct? Are we understanding? I'm not reading it because it's the same thing that we have done. Now, Mudit and Associates is appointed as statutory auditor for the financial year 23-24. The company is engaged into health club, fitness center and gym costumes. CAM is the engagement partner. CAM observed the following: customer base is reducing due to tough competition, payment of creditors have been delayed, company has not been able to pay salaries of staff and trainers, key financial ratios are in red and have deteriorated. Company has requested bankers to provide additional working capital of 1.5 CR. The same question we have done already, but just go through it. What audit procedures should be considered? How auditors should deal with going concern, and going concern, whether auditor, how auditors should deal with use of going concern if the disclosure is appropriate but material uncertainty exists and adequate disclosure is made in the FSO. Audit procedures, we know that you discuss with the management, evaluate management's future plan, and you perform, see what management plans to do in the future. Cash flow forecast है तो उसका reliability of data देखने का है, correct, and any other additional facts. So this is your additional procedures. Now material uncertainty है, going concern है, but management has reported, so I will give unmodified opinion and state the reasons and give reference to notes to accounts. Correct? Draw attention, state this thing and give a unmodified opinion. Next, Fun Fiesta operates a traveling circus. Circus वाला है, same question है, so we will skip this. It's the same question. Okay, now coming to 580 pertaining to written representation. Following is the written representation given by RES to its statutory auditors, that is Messrs CTK and Associates, for audit of financial year 23-24. The audit was completed and the report was dated 31st of July 2024 was issued. Point out if there is any anomaly in the written representation reproduced below on 15th April 2024. So the two associate chartered accountants representation letter is provided in connection with your audit of FS for the year ended 31st March for the purpose of expressing an opinion as to whether financial statements give a true and fair view. We confirm to the best of our knowledge, belief, having made such inquiries as we consider necessary for the purpose of appropriately informing ourselves. We confirm that the financial statement, ignoring the thing in bracket, we have fulfilled our responsibility as set out in the terms of audit engagement dated 17th August for preparation of FS in accordance with the FR standards. In particular, the financial statements give a true and fair view. Significant assumptions used by us in making accounting estimates, including those measured at fair value, are reasonable. Related party transactions and transactions have been appropriately accounted for and disclosed in accordance with applicable accounting standard. All events subsequent to date of financial statement and for which applicable accounting standard in India require adjustments have been adjusted or disclosed. Effect of uncorrected misstatements are immaterial both individually and in aggregate to FS as a whole. List of uncorrected misstatement is attached to representation letter. We have provided you with access to all information which we are aware that is relevant to the preparation of FS. Additional information that you have requested from us for the purpose of audit, and unrestricted access to persons within the entity from whom you determine it is necessary to obtain audit evidence. All transactions have been recorded in the accounting records and are reflected in the financial statements. We have disclosed to you the results of our assessment of the risk that financial statements may be materially misstated as a result of fraud. We have disclosed to you all information in relation to fraud or suspected fraud that we are aware of and involves management, employees and others where the fraud could have a material impact. We have disclosed all information in relation to allegations of fraud or suspected fraud affecting entities' financial statement communicated by employees, former employees, analysts, regulators or others. We have disclosed all instances of non-compliance or suspected non-compliance with laws and regulations. We have disclosed to you the identity of the entity's related party and all the related party relationships which we are aware as CFO. So here the written representation seems to be okay. They have disclosed everything, all information has been provided, so that's not a problem. Only issue that we can see here is that representation is given on 15th of April, whereas the audit report is given on 31st of July. When we were doing SA 580, we saw that the difference, the date has to be as near as practicable to, but not after the date of audit report. So near to nahi hai because April and July is far away, and there is a possibility of subsequent events coming between these 2 dates. So apart from that, I don't see any other issues. Let's just check the answer. Date of written representation, yes, shall be as near as practicable but not after the date of audit report, as the auditor is concerned with events occurring up to the date of audit report that may require disclosure in FS. The written representations are dated as near as practicable but not after the date. In the given situation, written representation is 15th, audit report is 31st July. There is a considerable lag. It could signify all subsequent events after the date of FS requiring adjustments or disclosures may not have been adjusted or disclosed. As audit report is dated 31st July, it reflects that the auditor has considered subsequent events occurring between date of FS and date of audit report. However, written representation pertains to 15th April. Next, PRSH and Company, statutory auditor of Make My Journey. The company is in the business of tours and travels. The annual turnover is 2000 crores and the profits are 190 crores. During the planning meeting of the management and auditors were discussed that the management needs to provide written representation letter to the auditors for the preparation of the financial statement and for completeness of information provided. At the time of closure, there has been some confusion about the requirement of representation letter. Management argued that representation need not be written and it can also be verbal, which has been provided to the audit team during audit. Auditors have completed the documentation, and hence, in a way, representation based on verbal discussions has also got documented. Auditors explain this is mandatory to obtain written representation in accordance with 580. However, still some confusion remains regarding the date and period. You are required to advise on the written representation. So here we know that a written representation has to be always in writing, a letter has to be given. So written representation, if it is oral, then it doesn't satisfy the requirements. They have just explained this particular thing. चलो पढ़ लेते हैं. As per SA 580, written representation. As written representations are necessary audit evidence, auditor's opinion cannot be expressed and audit reports cannot be dated before the date of written representation. Further, because auditor is concerned with events occurring up to the date of audit report that may require adjustment to a disclosure in FS, written presentations are dated as nearly as possible but not after the date of audit report. In some circumstances, it may be appropriate for the auditor to obtain written representation about a specific assertion in the financial statement. Whether this is the case, it may be necessary to require an updated written representation. It is for all periods referred to in the auditor's report, because management needs to reaffirm that the written representation previously made with respect to prior period also remain appropriate. Auditor and management may agree to form written representation that updates written representation relating to prior period. So prior period ka bhi written representation, if required, needs to be updated. Situation may arise where current management were not present during all the periods referred to in the audit report. Such person may assert that they are not in a position to provide written representation because they were not in place during the period. This fact, however, does not diminish such person's responsibility for the financial statements as a whole. Accordingly, the requirement for the auditor to request for written representation that cover the whole of the relevant period still applies. So here, even if that written representations mention that it was verbally discussed in the prior period, it can change and I can ask for a new representation. One, it has to be in writing. Two, if I am not available at that point of time and I am available as a key managerial person or a management today, then in that case, even though I was not there at that point of time, I still have to give the written representation. Okay. Now, next question. CAN is carrying out an audit of restated financial statements of BQR for the past 3 financial years 23-24, 22-23, 21-22 for onward submission to SEBI pursuant to their upcoming IPO. CAN is planning to issue an audit report on 5th August covering these restated financial statements. Before issuing, CAN requested management representation letter for the company. The management provided representation letter dated 1st April 2024 covering the period 23-24. So audit report is on 5th of August, representation letter 1st April. For the year 23, as they were not in position to provide for year 22, 23, 21, 22 because they were not in place during that period. How will CAN deal with the situation? So again the same thing, that even if you are not there for the prior period, you have to give. It does not diminish your liability and it has to be closer to the date of audit report. CAN is carrying out, it wants for past 3 years. Management has only given for 23-24. Written representations are necessary audit evidence. Auditor cannot express opinion. Subsequent events, auditor is concerned with events occurring up to the date of audit reports that may require adjustment. Written representations are dated as near as practicable to but not after the date of audit report. In some circumstances, it may be appropriate to obtain written representation about specific assertion in FS during the course of audit. Where this is the case, it may be necessary to request an updated written representation. Written representation or all periods referred to in audit report, because managements need to reaffirm that written representation previously made remain appropriate. So prior period का वापस से ले सकते हैं and management has to give. Auditor and management may agree to form of written representation that update representation relating to prior periods. Situation may arise where current management were not present during all periods referred to in the audit report. Such person may assert that they are not in a position to provide because they were not in the place. The fact, however, does not diminish such person's responsibility for the financial statements as a whole. Accordingly, requirement of auditor to request for written representation of prior period still applies. Therefore, therefore, as per above requirements, CN should take written representations for 22-23 and 21-22. In case BQR does not provide written representation, auditor shall discuss with management, re-evaluate the integrity and take appropriate action. So here, if in written representation is not provided, we had discuss with management, re-evaluate and take appropriate action. So this is something that we'll have to do if it is not provided. Simple question. Audit and Company is the statutory auditor of Fun Journey Limited, a company engaged in the tour and travel business. The company has an annual turnover of 1200 and profit of 150 crores. Is this same as this? Yeah, it's the same question. Okay, let's see just once. Yeah, so it's the same question. So we are not doing contending verbal confirmations were given and separate representation is not required. So this is same. So we will skip this question. CA Ashish is carrying on audit for restated financial statements of crop for 3 years. Again, similar question. Yes, same. Dates be same. Okay. So this is also similar. Not to be done. Yeah, last is this case study question. It covers all 560, 570, 580, everything is covered here. So we'll just quickly run through the facts and the questions and we'll discuss it. Infinity Hospitality Private Limited was established in 1996, was in the business of running hotels and tourist destination in state of Kerala. It took lease properties on long-term lease ranging from 10 to 12 years, most with a lock-in of whole term. The terms did not cover force majeure clause. The company was family-owned business and has created a good reputation as a value for money budget hotel. Most of the time, hotel clocks 60 to 75% occupancy rate, and during festival seasons, hotel business clock 100% occupancy. The capital structure was debt-oriented, over-leveraged. Primary working capital was blocked in maintaining and keeping the leased properties, running the restaurant, leases, food and beverages, salary, directors' remuneration, etc. The owners looked at the business as a cash cow and did not plough back the funds to expand the business, but were content with decent profits the hotel were generating. As the property was leased and not owned, most of the cash flow generated from operations was used in servicing the property and huge loans from financial institutions. What was left was withdrawn as directors' remuneration and dividend. Everything was going on smoothly. However, there were flash floods in Kerala due to unprecedented rains. There were landslides and roads were blocked. The entire tourist season was washed away due to infrastructure challenges. Accessibility to resort and hotel was badly hindered. Logistic support took time in far-flung areas. Visit to God's own country was last on the mind of tourists. The company was hardly trying to get back to some semblance of normalcy. When pandemic struck, it was double whammy for the company. So going concern chala gaya lagta hai. Now, the impact of travel and tourism hospitality was very severe. Management believed that the bad days would end soon and the business would be back to normal. They were also optimistic about the government coming up with the support for the industry and were hopeful of negotiating with lessors and financial institutions for relief. They decided on humanitarian grounds not to terminate the employees and continued paying them may be deferring 25% to be paid after 1 year. The immediate fallout was on top line as suddenly the business stopped. The auditor XYZ was conducting audit of the company and was grappling with the situation and is seeking your guidance for the course of action they need to follow. Based on the case scenario, you are required to provide your answers to the following. What additional audit procedures must be undertaken as per SA 570? So SA 570, we know that additional audit procedures. So they have clearly mentioned additional audit procedures. So we know that we have to speak to management, likelihood of future action, and cash flow statement, cash flow forecast has to be made, and reliability of the data has to be seen. Any additional data to be seen, and written representation. Correct? So this is your, and they have added a few more points depending on the type of entity that's there, but you can just write this down and should be perfectly okay if you don't add those additional points. Then, according to your judgment, what risk assessment procedure should the auditor consider for arriving at a conclusion based on going concern? So risk assessment procedure also, we know, discuss with management, time period which is there, evaluate management's assessment, and if need be, go beyond the time period. What should be the approach of the auditor if management agrees that material uncertainty exists, but the entity is a going concern? Also discuss reporting requirements. So here we will see that uncertainty exists, but is the management ready to show it in the notes to accounts, or they are not ready to show it in the notes to accounts, and accordingly my opinion will change. Correct? Here अगर दिखाता है तो ठीक है, नहीं दिखाता है तो I will have to issue adverse opinion. What if the auditor believes on the basis of his additional audit procedures conducted that the entity is not a going concern, but the management is not accepting the same? What is the course of action that the auditor will take? So here, if there is a issue with the going concern, inappropriate hai, then management has to show it. If not, then you will give a adverse opinion. So in this chart, this is the point we look at. Management unwilling to make or extend assessment, consider implications on audit report, and you will issue a adverse opinion. Correct? What kind of written representation does the auditor need to obtain in case of scenario covered in question 3 above? So question 3 is talking about management agrees that material uncertainty exists. So here what is the representation? ये एक बार देख लो. Whether management and where appropriate, those charged with governance regarding their plan for future action and the reliability regarding their plan for future action and their feasibility of these plans. So here, sorry. No, we don't have it here. Basically, it's just a general thing, but we don't have it here. We can add it here. कैसे लिखेंगे पता है इसको? Here in your chart. Just add one line. Written representation provided, and just say two things: management's plan for future action just add this here because in case it is asked you should be able to write down. And here say feasibility of such plan, because we've written what is the action if written representation not provided. यहाँ पे एक खाली add करके रखो written representation provided. ठीक है? So this is all about your 560, 570 and 580, And that's it for today. Thank you so much. Bye bye.